we can indeed have, let's say, a technical recession without going through a hard landing. So that's, let's say, our key assumption. And for the rest of the R's, I think one of them, which is probably the most interesting, is the one who already started last week, which is rotation. I think to me that was the most interesting to start the year, because what we saw last week was very interesting in the sense that we can indeed have some of the winners of last year being under pressure, whereas the market still looks like a bull market, because you have other parts of the markets which are coming back. And here I'm talking about the laggards of 2023, like financials, for instance, energy, or even healthcare. So I think that the R of rotation was, to me, the most striking last week.
Charles-Henri, though, the broader markets will not look that impressive on this rotation story unless technology doesn't have continued declines, because the fact of the matter is it's such an outweighing sector now. It has such a predominance on, for instance, the S&P 500, not just the NASDAQ, that even if we get a moderately down tick performance on technology and we get a decent rally on the other sectors, because of that weighting now, it's hard to see it for those people looking at more index-like funds.
Well, you're right. And I think one of the issues as we enter 2024 was the fact that, yes, the market is very concentrated. We are talking about just 7 stocks making 30% of the S&P 500. So when you have some of them, like Apple, for instance, under pressure last week, obviously, this put a huge pressure on the index. And also one thing was maybe too much euphoria. If you look at the positioning of the CTAs or futures on the S&P 500 to start the year, they were very much extended. Now, remember, we had a tremendous end of the year in 2023. The market maybe went a bit ahead of itself. Now it's pulling back. And obviously, because of the large weights of these big stocks, as you mentioned, obviously they are under pressure now that we are seeing some, let's say, profit taking on these long positions. But again, I think what is very healthy is to see some other parts of the market taking part of the bull market. This is what we want to see, a broadening of the upside participation. This was lacking clearly last year, and now it's starting to look something which is indeed working.